All right, everyone, ready to dive in. Today, we're tackling this idea of parabolic growth in the world of Bitcoin.
Yeah, it's a hot topic, that's for sure.
You see those charts, those lines shooting straight up like a rocket.
It gets people excited.
Definitely. And there's this article we're looking at that breaks down Bitcoin's price potential, specifically through the lens of its 4-year
Right,
cycles.
cycles are key.
Because it's not just random, right? There's this built-in mechanism with the halving event, like clockwork every 4 years.
It's like Bitcoin's own internal rhythm.
Exactly. But I think it's worth a quick refresher. For those who are newer to Bitcoin or maybe just haven't thought about it in a while, why does this halving thing even matter? What does it actually do?
Okay, so imagine Bitcoin's like a giant, perfectly balanced scale.
Mm.
On one side, you've got supply. On the other, you've got demand.
Okay, I can picture that.
So every 4 years, with this halving event, we essentially remove a big chunk of weight from the supply side.
Less new Bitcoin coming into existence.
Exactly. And assuming demand stays the same, or even better, increases.
Which it tends to do as more people get interested in Bitcoin.
Exactly. That's when you see the price start to climb. Basic supply and demand, but with these fascinating, predictable cycles built right in.
It makes sense when you lay it out like that, but here's the thing. If everyone know WS the halving is coming, wouldn't smart investors just sell right before, cash in on the hype?
You'd think so, wouldn't you? And sure, some people try to time the market that way.
Virus.
Precisely. So while those cycles give us a framework, there's always an element of psychology, of speculation, of animal spirits, as they say, that throws a wrench in the works.
So trying to pinpoint the exact peak, probably not the best strategy.
Unless you're feeling really lucky,
Mm-hmm.
but I wouldn't bet on it.
That's good advice. So where does that leave us right now? This article we're looking at, it says Bitcoin's currently in what they call the recovery phase. What does that even mean for someone who's, say, checking their portfolio every day, not seeing those massive gains yet?
Okay, so imagine a spring,
Mm.
right? You push down on it, compress all that energy, and for a moment, everything's still.
But you know it's about to spring back with force.
Exactly. The recovery phase is like that moment of stillness. Bitcoin's price took a significant dip in the previous cycle, and now we're in this period of rebuilding.
So it's less about instant gratification.
This is where patience really comes into play. The true believers, they see this as the time to accumulate more Bitcoin, knowing that the potential energy building up, well, it could lead to a significant move upward.
It's like the calm before the potential storm.
I like that.
We're going to take a quick break, but when we come back, I want to get into some of the factors that could really ignite this next bull run. Stick with us. This article we've been digging into, it mentions this idea of global liquidity as a potential, I don't know, tailwind for Bitcoin.
Yeah, it's interesting, isn't it?
Especially because they tie it to this idea of a possible recession, which, to my mind, those two things don't usually go together.
It's counterintuitive for sure. People think recession, got to batten down the hatches, you know?
Yeah.
But global liquidity, it's essentially a measure of how much money is circulating in the system.
Okay, so more money, more problems, unless you're Bitcoin.
Something like that. Think of it this way. When central banks print more money, which they often do during recessions, to try and stimulate the economy,
Right, trying to get things moving again.
it's like they're turning up the flow on this giant fire hose of money. Some of that money, inevitably, is going to end up in riskier assets.
Like our friend Bitcoin.
Bingo.
Uh,
Because, let's face it, when traditional markets are looking shaky,
Bitcoin starts looking like a safe haven.
the OG digital gold narrative. It's decentralized, it's got a limited supply, it's like the antidote to inflationary fears.
So even if some people pull back on investments during a recession, this global liquidity thing could actually counteract that, at least when it comes to Bitcoin.
It's a possibility. It's like this weird push and pull effect. You've got fear and uncertainty on one side, but then this potential wave of easy money on the other.
It's enough to make your head spin. Okay, so we've got this macroeconomic picture, maybe pointing towards Bitcoin, but then the article also mentions these on-chain metrics.
Ah, yes, on-chain metrics, the crystal ball of the Bitcoin world.
Looks you. It does feel a bit like that sometimes. But seriously, what are we actually looking at here? What are these metrics telling us?
So instead of trying to read the minds of millions of investors,
Which is impossible.
exactly,
Mm.
on-chain metrics allow us to look at the actual behavior of Bitcoin holders. It's like having a peek behind the curtain.
So it's data-driven speculation.
You could say that. Let's say you see a spike in short-term holders. That's a sign that a lot of people are buying and selling quickly. Maybe FOMO is setting in.
Fear of missing out. The classic.
Exactly. But if you see more and more Bitcoin moving into the hands of long-term holders, that's a different story.
People who are in it for the long haul. Believers.
Exactly. They're not fazed by the day-to-day price swings. They're playing the long game, which historically has been a pretty good strategy with Bitcoin.
So it's less about timing the market perfectly and more about understanding these underlying trends.
Exactly. And that's what makes these on-chain metrics so valuable. They can give us a glimpse into the collective psychology of the market, which, as we've discussed, is a huge driver of Bitcoin's price.
Right, because as much as we like to pretend it's all about the tech,
Human behavior is always a factor.
it's the human element that makes this whole thing so fascinating and unpredictable.
I couldn't agree more.
All right, so we've got these cycles, we've got big money potentially entering the space, we've got these metrics giving us a glimpse into market sentiment. Is that basically what people are talking about when they say Bitcoin is going to go parabolic? It really does feel like all these pieces are coming together, doesn't it? You've got the having the institutions dipping their toes in these on-chain metrics hinting at, well, who knows what.
And that's the exciting part, isn't it? That sense of anticipation that anything is possible.
It's what gets people talking about parabolic growth, right? Like those Bitcoin price charts are going to break free from the graphs and just soar.
It's a seductive idea for sure. That exponential, a vertical leap into the stratosphere.
Exactly. But you've been around the block a few times with Bitcoin. What's the reality check here? Because what goes up?
Usually comes down. Gravity still applies even in the digital world.
So how do we make sense of all this then? Should our listeners be dusting off their old Bitcoin wallets or, battening down the hatches for another crypto winter?
Here's the thing. It's not about trying to predict the exact peak or bottom of the market. That's a fool's errand. It's about understanding the forces at play.
So those cycles we talked about, the institutional interest, the whole global liquidity picture.
Those are the things worth paying attention to, not the hype, not the noise. Focus on the fundamentals, and you'll be in a much better position to make informed decisions.
It's about staying grounded, right? Not getting swept up in the FOMO.
Exactly. Bitcoin rewards patience and a long-term perspective. Always has, always will.
So maybe instead of chasing those parabolic gains, it's about riding the waves. Understanding that there will be ups and downs, but staying focused on the long game.
Now you're getting it. It's a marathon, not a sprint.
Well said. Well said. And on that note, I think it's time to wrap up this deep dive. But before we go, I want to leave our listeners with this. We've talked a lot about these cycles, right?
The ebb and flow of the Bitcoin market.
Okay, so here's a question. If we can learn to better understand these cycles, could we use that knowledge to our advantage?
No, that's a question for the ages, isn't it?
Maybe we'll have to save it for another deep dive. But for now, keep exploring, keep asking those tough questions, and as always, happy investing, everyone.